Welcome to yet another episode discussing business on the Green on Tea Time with me, Chaiti Narula. Today on the show, we will be discussing the ecology when it comes to private equity in India with a very dynamic CEO joining me from Mumbai, who is the partner and CEO of Everstone Capital. On the show this week, we have Dhanpal Jhaveri, partner and CEO, Everstone Capital.
You know, there has been traction, and to be clear, India continues to be a very interesting market for global strategics. We think inbound investment activity will continue to be reasonably robust.
In news, Tiger Woods reclaims #1 ranking with a win of Arnold Palmer Invitational, and Arjun Atwal lying second at Louisiana Open in US. Welcome to Tea Time today with me.
Thank you, Chaiti. Thank you for having me over.
It's a pleasure to have you on the show. Let's hit the brass tacks straight away. Now, on the back of recent Eurozone crisis, the weakening of the rupee, you've also seen slower economic reforms in our country. That's something very conspicuous in the year gone by. How does the inbound deal activity look in our country on the back of all these?
Chaiti, there has been concerns around especially around the slowing economic growth in the country itself. As you know, over the last 8 quarters, quarter on quarter, India's GDP has been actually sliding from a high of close to 9% to about a little over 5 today.
Yeah.
And the issue with that has been both internal reasons as well as external reasons. See, external reasons, as we all know, has been founded in the financial crisis in 2008, and after that, the low level of economic activity which we've seen globally. But we've also seen issues on the domestic front, where there has been, especially on the infrastructure and on the capital investment side, there have been regulatory policy and other issues which have held back the pace of investment and activity in the country itself. So we have seen a slow period of investment happening, but I do believe that this also provides opportunities for stronger businesses, businesses which are leveraging off the Indian story, especially around domestic consumption, opportunity for those kind of businesses to actually build and strengthen their businesses today.
Interesting. Now, you spoke about the inbound deal activity. What about the outbound deal activity? On the back of economic headwinds, are Indian acquirers very cautious at this point of time?
Outbound, as you know, has been relatively in the history of Indian economics, has been relatively recent. It's only over the last decade that Indians have become much more aggressive about pursuing foreign markets and different geographies. Again, I think over there, because of headwinds in the local markets over there, a lot of the investments and the acquisitions which were done over the last several years have yet not paid dividends.
Correct.
So Indians are by nature therefore much more cautious today about making investments overseas. And we think that there will be a certain level of activity, but it will be more subdued than what it has been in the past.
Dhanpal, do you think that we are going to be seeing some sort of conspicuous consolidation coming into sectors like media, aviation and retail on the back of FDI opening up in our country?
Actually, I think the contrary. These are sectors which continue to show high levels of growth, especially if you look at retail, for example, in India. Organized retail continues to play a very small part of the overall retail basket in Indian consumption.
It's still dominated by the unorganized sector, isn't it?
Absolutely. And that's where I see both the entry of foreign and Indian players, the opportunity to raise capital domestically as well as through international investors.
Now, despite a fair bit of resurgence, PE activity hasn't picked up momentum like it did in the year 2007 and 2008. Which are the sectors, in your opinion, where private equity activity will gain momentum this year?
So 2007 and 8 in some ways a little bit of an aberration, because that also coincided with a period where we had possibly the most amount of capital availability globally, and
Right.
therefore as a result of that a lot of capital being available in India itself. I think that as the markets have come back to a new normal, as I would say, I would say the big Indian investment opportunity continues to be around domestic consumption. Close to about 60% of this country's GDP is contributed by domestic consumption. And that, when I mean consumption, is everything from consumer products to services to essentially even things like retail financial services, telecom services, and all a host of products and services around that. This, I believe, continues to be the mainstay of where investment dollars will flow.
Interesting. On that note, time now for us to play our chip shot and continue with our game. Come.
Sure. Good shot.
Thank you. Now, are you facing challenges on exits from your portfolio companies given the weak IPO market?
So if you look at capital markets in India,
Right.
It's generally been one where there have been windows where the capital markets have done very well and companies have got an opportunity to list and investors therefore an opportunity to exit.
Right.
But these windows are fairly short and there are wide periods in between where the markets are essentially shut for any kind of capital market activity, especially for
Right.
IPOs. What we have over a period of time, our strategies have evolved essentially not just to include an IPO as an exit option,
Right.
but we also look at in many situations where trade sales, investment by a strategic partner, as well as secondaries to other financial investors who want to invest in this business are, I would say, very credible
Right.
and viable options today that the market offers. If you look at again from a historical perspective, you've generally seen a third of the exits happening through the capital markets and a third happening through strategic or trade sales,
Right.
and a third happening to secondaries, to financial investors. I do believe that as long as the markets remain shut, the other two options will be the main options through which investors will look to exit their investments.
Are the recent reforms, that is FDI and retail, broadcasting and media as well, and also the positive reforms around the tax amendment policy, paving way to restore investor confidence and the sentiment back into India?
It's an interesting question because, since we've seen Mr. Chidambaram come in,
Right.
a host of policy initiatives have been announced.
Right.
A few have also gone through and
Yes.
been passed. And we've again seen I would say, the overall mood coming back into the markets with the capital markets
Right.
and the stock markets again
Correct.
rallying quite smartly. But the challenge remains at the grassroots, which is essentially one of converting thoughts and words into action. And I think a lot more needs to be done on that front. We as a country have a long way to go. If you look at recent statistics, both from a domestic and an international front, there has been an increase in FI flows into this country and an increase in FDI flow, whereas domestic institutional investors are actually selling. So on there's kind of a little bit of a contrarian trend over here,
Right.
which kind of shows that the global markets yet see India as a market to be invested in over the long term.
Time now for you to play your game.
Sure.
Continue. Come.
Thank you.
Wonderful, Dhanpal. On that happy note, let's take a quick break right here on Tea Time. On the other side of this break, we will discuss a little more in detail about whether e-commerce remains to be a viable growth opportunity for private equity companies like yours.
There has been traction, and to be clear, India continues to be a very interesting market for global strategics. We think inbound investment activity will continue to be reasonably robust.
Thank you for staying with us on Tea Time. We're in conversation with Dhanpal Jhaveri of Everstone Capital. Now, we were discussing about private equity funding into e-commerce as well. Does that continue to remain a viable growth opportunity for private equity firms like yours in India?
For us, e-commerce has always been a bit of a challenge, and mainly for two reasons. Our first issue with e-commerce is that there is no clear path to profitability.
Right.
Most of these companies are essentially in their early stage where they're looking to build revenue.
Right.
The business models haven't stabilized, and a lot of them even continue today to operate at gross margins which are actually negative.
Right.
And as a result of that, there's a little bit of a question mark as to when they will start actually breaking even and generating profits.
Right.
The second issue around this industry is that it's almost a winner-take-all business. The companies which have the ability to survive, sustain, and scale, and continue to beat out competition are the ones who actually have proven, at least if you look at the U.S. markets or other markets, been able to actually take the opportunity and create value. So, in our view, this is too much of a venture capital type bet. It's something that we personally are uncomfortable with, and therefore we really don't have an intention to put investment dollars to work over there. But there is clearly the younger audience participate in the online buying
Right.
and e-commerce along with that. There clearly is an opportunity to build a business.
Right.
Question is, who do you back and how do you
Right. So it still remains more of a VC-driven funding rather than private equities going ahead and investing
I
into
think so
e-commerce.
too.
Now,
I think
speaking
so.
about
Yeah.
venture capitalists, do you think venture capitalists across the board are looking at deriving value and investing in big data analytics, enterprise mobility, and cloud computing, which is the main trend that we're latching onto in this country?
Yeah. Again, this is an area where we've generally stayed away from because most of the businesses are leveraged to global markets.
Right.
They're looking to essentially service companies in North America and Europe. And our investment theses and philosophies have been more on the domestic market and the
Correct.
Indian opportunity
Right.
as a whole.
Right.
So if you look at big data companies, again, I think the difference between the ones who are getting capital and the others who aren't is really the ones who've created models which can scale
Correct.
are the ones who are getting funded.
Right.
But a lot of other research, analytics, and other companies have not been able to attract capital because of their question mark around scalability.
So how much is foreign capital gaining ground in this country? Do you see a lot of investments coming in from FVCIs and FDIs in this country?
There has been traction, and to be clear, India continues to be a very interesting market for global strategics. We think inbound investment activity will continue to be reasonably robust. There are lots of, I would say, multinationals who yet don't have an entry and don't have a presence in this country. In fact, in some ways, it plays into a lot of the exit strategies for financial investors. That as good businesses look to grow, new interest will come from strategic rather than just financial investors. If you purely look at the financial investment climate, I think some of the things I mentioned around tax stability, investment climate, policy frameworks, etc., and further progress in that area would continue to attract more investment dollars in this country. So, long term, we continue to remain very positive about the outlook and for the future of investment capitals into India. And one just has to work through the short-term volatility.
You spoke about being very bullish on the inbound activity coming into India. Now, do mismatch in valuations and poor governance continue to remain a concern in this country for most inbound investors?
I think, organized capital will always ensure that and work towards ensuring that capital flows into businesses
Right.
which have high standards of corporate governance,
Right.
very strong possibility to create value.
Right.
Now, the element around valuation itself is really driven partly by demand and supply dynamics.
Right.
So today we are in a market environment where the capital markets don't offer too many opportunities for Indian corporates to raise capital. And we do believe that the private markets, especially in the form of private equity and venture capital, are a very viable alternative to Indian companies looking to raise growth capital. So as long as these businesses are robust, with strong growth potential and very strong ethics and corporate governance frameworks, there is no reason why I believe it can't attract good money.
Well, so much for saying that your bunker shots are not that great. In fact, they're stunning, outstanding.
Thank
So
you.
how much does your firm Everstone plan to invest in India in the next 2 years, and what are the sources of these deals, and what kind of investments are these?
So we raised a second fund in 2011. It
Right.
was a $580 million India dedicated fund. We have now made 8 investments, investing a little bit over $200 million out of that fund. So we yet have a lot of dry powder to invest.
Correct.
Our investment themes continue to be focused on domestic consumption
Right.
and what we call enablers of infrastructure.
Right.
So we believe there are lots more opportunities to put capital to work in these across these two themes. We also see a lot of interesting opportunities, not just in the urban but also in the rural landscape. With farm income rising, with a lot of focus on food security and basically increasing food productivity, and a lot of, I would say, disposable income in the hands of rural India, there is again a huge opportunity to essentially produce goods and services and essentially sell into those markets. So we see rural markets as a very interesting area to be putting capital to work.
Well, on that note, let's take a quick break right here on Tea Time. Remember, we are in conversation with Dhanpal Jhaveri, who is the partner and CEO of Everstone Capital. On the other side of this break, we will get to know you better and also touch upon your golfing escapades as well.
Sachin Tendulkar continuously evolved his game to get it to another level and continue to be relevant in the times that he was competing.
Thank you for staying with us on Tea Time. We're in conversation with Dhanpal Jhaveri. Now, Dhanpal, this is the part where we get to know you better. Of course, let's start off with your company. What are your company's differentiating factors vis-a-vis other private equity firms? How was your company founded?
Just to give you a sense of the history, we are a fairly young firm. We started in 2006
Right.
with our first fund, which we raised about $425 million. Now, this is a firm which has been founded by 2 ex-Goldman colleagues, Samir and Atul. They essentially ran this business in Goldman Europe and decided essentially to come back and build a substantial private equity business in India. Since then, we've gone from strength to strength. We currently manage $1.8 billion, and this is both across private equity and real estate. We are today a fairly large firm. We've pretty much got the largest platform on the ground in India. We have 120 professionals across the firm. We have 5 offices in Singapore, Mauritius, Bombay, Delhi, Bangalore, and we continue to be focused on creating long-term value for our investors.
Now, some of the key decisions that you have made that have benefited your company.
You know, there
have been a few turnaround decisions that you have made.
So
to
no
my knowledge.
single decision I say, because these are all, we've always believed in India's strategy has been overrated, and it's execution which is really the way to make money in India. So for us, the entire team is focused on making sure that the companies in which we invest are from day to day actually engaging actively and executing well on the ground there. So I would say a few of the few businesses that we've actually feel pretty good about the way we've helped the businesses grow would be across a whole host of spaces. If you take, for example, Global Hospitals, which is a healthcare company, we are proud to say that the company has grown from a single location to 5 locations and has close to about 2,000 beds as a company, and has grown close to about 5-fold in terms of revenue. Another business which we again feel really good about is a company called Region. And in the last 5 years, Region has become today amongst the top wind energy, wind turbine equipment manufacturers in the country, and has amongst the highest market shares in the country itself.
Quite an inspiring story right there. What another thing which is very inspiring about you is that at the young age of 31, you became a leader. You became a partner with KPMG when you were 31, and of course even today you continue to go strength to strength with the designation that you hold with Everstone Capital as well. What are your tips for the youth of today who are watching you right now? Because of course there's an inspirational story right there coming in from you. Who's experienced it?
There's no recipe for success. I think one has to find their own path, and today's India is such that I think the opportunity continues to be large for the young and the talented. I do believe that we do require a lot more hard work and the perseverance and commitment to follow through with our thoughts and ideals and what we have laid out for ourselves. I think the most talented individual of the world is is nothing unless he puts in a lot of hard work and commitment.
You know, apart from adversity, also the way you play your game of golf is also determines the kind of person you are. Would you agree to that?
Absolutely. I think, I've played golf with a lot of people, and I think the golf course tends to bring out the best and sometimes the worst in people.
Really?
So, in some ways you can read the person by reading the way he's played or she's played her game. And it's an interesting kind of a lesson when you have to spend 4 hours on the course with nothing other than the ball, which is stationary, and yourself, and you got to play with all those demons in your mind, get them away, and hope to hit a shot which you're pleased with.
Well, talking about being on the green, we're here on the putting green, so time now for us to finish our game.
Sure.
Come.
Nice roll.
Well, so speaking about corporate golf challenges now, the recent Pro-Am that you played with Ashok Kumar indeed was very exciting for you because you also look up to him as a golfer apart from Tiger Woods as well. So what's interesting about Ashok Kumar that you like? The fact that he became a caddy, from a caddy he became a golfer.
Absolutely. The best advice Ashok gave me when we were playing this Pro-Am was essentially you have nothing to lose.
Right.
Why don't you hit the ball like a tiger? Don't worry about the next shot. Go and play the shot as you were playing it as it was the last shot and just give it all you can. So I just felt that in some ways, if you think about, extrapolating that to life and living life to the fullest every day rather than worrying about what's going to happen, you have to obviously plan for the future, but you got to live life every day. So I think in many ways the way he played his golf represented what he thought about life. And that was a very interesting, perspective that it gave me about how I should be living life.
Well, hitting shots like a tiger, and Tiger Woods, of course, is another golfer that you look up to. What is it about his game that inspires you so much?
Well, Tiger's now the comeback kid. If you see 2013, he's done extremely well. And it's partly to the fact that as he has grown as a golfer, as he has matured, he has had to change and adapt his game to be more relevant and more, I would say, competitive. And we've seen this trait in great people, right? Sachin Tendulkar continuously evolved his game to get it to another level and continue to be relevant in the times that he was competing. So I think it's all about that, that as you age and as you grow older, you got to be more relevant in time and keep adapting and changing and being more relevant to where you are and what times you live in.
Well, you continue playing like a tiger, all puns intended right there.
Thank you, Jyoti.
It was indeed a pleasure to have you on the show. That's a wrap from Dhanpal and me, Chaiti Narula from Bombay Presidency Golf Club right here at Chembur in Mumbai. I will see you next week again. Until then, may the sport be with you.